Our next guest, Amit Rajpal, portfolio manager and partner at Marshall Wace, joins us, and he's a great stock picker because he told me during the depths of the financial crisis, buy Citigroup at below $1. And how much would I have made today, Amit?
Only 400%.
Yeah, there you go. Pretty nice. And you picked Ag Bank as well during the depths of October, which has come up quite a bit. So what do you do now, given the slowing profit growth that we're seeing for these big lenders in China?
I think what's exciting about China is that we're moving into a new phase of the financial liberalization process. And this financial liberalization process in China is centered around the capital markets. So there's a lot of support that's building for building and developing the capital markets. So firstly, institutionalizing the capital markets. Secondly, getting more money into the capital markets. Thirdly, improving the quality of the capital markets. And lastly, providing more tools and making it more sophisticated. Right. This is not just in the equities domain. It's also in fixed income and foreign exchange. And there seems to be a whole lot of policy support moving in this direction.
But no RRR cuts yet, Amit, which is concerning the markets.
Correct. So that is the cyclical aspect. So what I'm talking about is a structural move. Right. Cyclically, China will ease, but the pace of easing is probably a little bit lower than expectations. Cyclically, hard landing seems to be off the table, so sequentially growth seems to be getting better. The best way to play this thesis in China is through the securities firms and the financial conglomerates like Ping An. The banks are okay. They will pick up multiple, but as you rightly said, their earnings growth is now slowing. Yeah. They're almost too big. The big banks are almost too big.
Well, that's what Premier Wen Jiabao said.
And China needs to rebalance its financial system in favor of smaller, more flexible, more market-oriented firms like Haitong Securities or Citi Securities, like Ping An Insurance. It doesn't mean that the big banks will go backwards. It just means that they'll go up at a slower pace.
So that's your pick, Haitong Securities and Ping An Banks, also in Citi. That's what I heard you just mention. But, you know, didn't you tell me in October to buy Ag Bank and buy some of these rural lenders? If I did back then, and let's say, you know, I want to now, is it still worth getting in?
So yes, within the banks, you've got to find well-defined niches where there's policy support, where there's growth, where there's potential for credit quality improvement still. And within that, Ag Bank and Chongqing are the two banks which have access to that niche where there's still growth. So within the bigger banks, yes, Ag Bank would clearly be the preferred play over the rest of the big banks. And I think all the banks will go up, but just not at the same rate that you're seeing other aspects of financial services develop in China.
Now, Amit, do you look at Korean lenders at all? Because it looks like, well, okay, tell me about Worry Finance, and would you be interested? I mean, it seems like they're looking for bids once again, third time lucky, hopefully.
So, look, I mean, I think if they're able to consummate a transfer of government shareholding into private hands, that is, all else being equal, very good for Worry Finance and the Korean banking system, because there is deep value in these stocks. Worry Finance trades at 0.5 times book value. Right. However, there is going to be limited foreign interest in these bidding processes, given how foreigners have historically been treated by the Koreans with regards to Korean financial institutions.
KEB, Lone Star, that's a great example.
And therefore, the pools of capital that are available to buy Worry Finance are essentially domestic and constrained and unable to pay top dollar.
Right. So would you get into Worry now, anticipating a bid at some point?
No, not really, because I think it's still a very constrained situation, and I think the market figures that they keep putting up this proposal, but it hasn't yet come through.
Okay. One more question for you, Amit, because, you know, we talked about Citi back in 2008. You're still saying buy Citi. What do you say with Citigroup? So, are you friends with Pandit or something?
I like Pandit. But I think with Citi, it is the best positioned large bank in the world. And that is because it's got access to these markets, the emerging markets, especially on a consumer basis. Citi also is running a cost-cutting program. Citi is also severely undervalued. And in spite of failing the stress test, we'd expect for them to come back and be able to repay shareholders towards the end of this year through a dividend and a share buyback. So I think there's a lot on the table at Citi, but that's unique to Citi. It's not a function of all big banks doing well in the U.S.
I wouldn't make 400% anymore from this point.
That's not going to happen.
That's not going to happen. Okay, Amit, thank you so much. Good to see you. Thank you so much for your time.